Okay, welcome. It's another not a weekend video. It's a Monday morning video for me, and thank you for watching, I suppose. And let's get into it. This is Enda from Bullwaves, obviously. So everyone on the website, good morning to you. So hopefully I will preempt the weekly trade rather than review last week's trade. Okay, so here we are, euro dollar. On the daily count here, you can see. The long-term pattern that I've been following is a very, very long and large triangle. So here is the plan of supposedly how a triangle ideally would continue or would pan out from here. So we have a top in wave C, and that came in at the previous high, which was somewhere around 123.50. We had 3 waves down since that high. So, there's an argument to be said that we have an argument to be made that we have a D wave and E wave coming in right now, but I'm just not. I think it needs to be more. It needs to be more meat in these moves before we can. Yeah, it just doesn't. It doesn't count really quite well. There needs to be quite a beefier move to warrant that D wave label there. So I think it's at the moment it's A and B that I'm working with. So if you look at it in terms of let's say relative to the previous move in wave C, so we've only come down, let's say, to not even probably 38% of the previous move down in wave A. So we did retrace a large percentage of this of the previous C wave in wave A. So that that's again another, let's say, interesting signpost, which kind of points me anyway to the fact that this is an interim wave within the larger structure. So we've got wave A down, which retraced most of wave C. We've got wave B up, which actually retraced quite a little. Reasonably higher than the previous wave A. So we've got a head and shoulders type of pattern here at the moment. This B wave here. Actually, let's get it into the 4-hour chart here before I get too intricate. So you can see the wave A down there and 3 waves down, wave B up. This could either be in the short-term chart. I'm actually counting this as wave A of B, but it's equally valid to call this all of wave B because it's retraced so much of wave A right now. And we've actually come up as far as the, if this is A, B, C down, we've come up as far as almost as far as the B wave high, which is, it would be a reasonable target for this larger wave B. So in blue here. So if I'm anything this morning, I'm probably leaning towards this wave B in blue rather than just wave A of B. In the short-term count, we would allow for an A, B, C to complete wave B. In this 4-hour count, let's just leave that as it is. We might. Well, this week will pretty much decide what's going to happen on this one. So if we top out, it'll either be in a lower degree wave B or in this higher degree wave B. And both of them would suggest interim declines. In this count, you would at least fall below 117, possibly below 115. Let's get into the hourly count. So you can see here that we retraced higher. I thought that this B wave was already underway last week, but we retraced higher back above the previous high, only slightly, but it's enough to invalidate that. So it's most likely either we've got 5 waves up in wave A completing now, or we've got an A, B, C in wave B completing now. Depends on which way you want to view that now at the moment. I think at least we will come back down to break 119.80 in wave A in the next day or two. So by midweek anyway, but maybe even by late tonight, Monday, that is, or midweek or midday tomorrow on Tuesday's trade. So that would be that would allow for a topping in wave A and wave B to trace out. I'm expecting a decline this week. Didn't get it last week, so let's see if we can move lower this week in 3 waves, in at least this lower degree wave B wave or count. Now, if you can track all those B's and A's, you're doing well. I'm going to move on. I nearly confused myself there, so it's time to move on. So here is go to the daily count. Here's pound dollar daily. It's similar. It's a pretty similar count, as the euro dollar count, simply because we have had a long-term range contraction. So that in general, that just screams it screams triangle basically. So if we have topped out in a C wave, then we should move lower in a D wave, and it should be in 3 waves. So that's the general thesis, the general consensus. We could view 3 waves down done, and this being 3 waves up in wave B. Does this mean A, B of D? And we would expect a C wave down. The move late last week kind of confounded things a little bit, but this could be a 3rd wave of wave C. So we'll see how that goes later on this week. So you can see here we have A wave up, B wave down, and then maybe 5 waves up in wave C. So we could be going wave 1, 2, 3, 4, and 5. We're sitting just below the 78.6 retracement right now in wave B, and also we have that actually invalidation top comes in at 142.39. So we don't want to go any higher than 142.39 for this B wave to remain valid. Okay, so B wave to top out. So watch for 5 waves up. Let's say a filling of this triangle, or sorry, this trend channel in 5 waves, and then a return lower in wave C. Okay, so here is dollar yen daily. I think we have a triangle complete in wave B. So another B wave triangle again. So this in so many cases, dollar yen kind of it runs its own path, and then the Atlantic pairs kind of tend to, in a lot of ways, they tend to kind of move together. Obviously, in the short term, that can prove incorrect in the short term, but in the medium term, they do tend to kind of trend together. But dollar yen tends to kind of go first, and this move up off that wave B low early this year, so that was in early January, is pretty darn impulsive. So I'm counting this as, in the short term, an ongoing 5-wave structure higher. This could also be a larger degree 1-2 underway. So maybe we have wave 1 already complete. We'll see how that works out. But for the longer term, this is a pretty, let's say, bullish pattern developing in dollar yen, which would be bullish for the dollar in general, which would be bearish for risk assets in general, and bearish for commodities, really. A slightly different outlook on gold, but in the short term, that should probably play into gold also. Okay, so let's get into the 4-hour count. Here is the main wave count, counting wave 1, 2, an extension wave 3, and now wave 4 complete, moving higher in wave 5. Now the alternate count is slightly more bullish, but points the same way. This alternate count here in red, or boxed in red there, you can see, would regard wave 1 and 2 already complete, whilst the main operating wave count would still be allowing for wave 1 here in blue to complete later on. Both counts are, let's say, short-term bullish, but the alternate count would allow for a larger extension rally in a third wave to begin sooner. Okay, so that's anyway the structure in the short term. Let's get into this fourth wave decline and now possible bullish 1-2 pattern developing off that fourth wave decline. Interesting enough, we kind of came to a halt at the previous fourth wave. We dipped below it, and then we rallied off that. After breaking that support, we rallied out of it again. Now we're holding above it. Yet to be decided whether this is complete or not. Okay, so here's the hourly count. Yeah, I did have that. There you are. Dollar yen hourly count. You can see here's that fourth wave low, tracking it as a flat pattern, so ABC down. The B wave is it's a little bit suspect, let's say, to say the least. So maybe 3 waves down in wave 4 complete, and now we have a possible 5-wave rally and a 3-wave decline complete. So is this a bullish impulse wave? Well, it's labeled that way. We would expect a rally into wave 3. We came down in 3 waves. Yet to confirm if this second wave is done, but we did retrace to the pip. Let's say we had a rally, 5-wave rally in wave 1, the 3-wave decline in wave 2, retraced the 61.8% retracement to the pip, and then bounced off that level again. So there's some sort of systematic trading going on here that was looking for that retracement and then bought in at that retracement. But we had this kind of single bar lower into a wave C. I think that was late Thursday or late Friday, early Friday, and then we bounced higher off that. Now it's so far the rally here has not confirmed as impulse wave higher, but if that 108.33 holds for the next day or so, and especially if we break above this triangle B wave high there at 109.42, then I think we're probably in line for a bullish 1-2 again to develop. So possibility of a third wave coming in if this pattern holds in the short term. Okay, so speaking of patterns that don't hold in the short term, let's talk about the market I don't want to talk about. I'm so darn sick of it. But anyway, here is the Dow daily count topping out a fifth wave as always, as has been, oh boy, for a while now. The kind of, let's say I'm pretty sure that this fifth wave is correct. I am pretty sure that we are in a fifth of a fifth wave. The only contention I have with myself right now is the internal pattern of this fifth wave here. Is it veering towards a standard 5-wave rally? Although I can't account for this action here very well if that's the case. Or is it still holding that ending diagonal pattern, which could very well be. I'm going to show you, well, actually, probably the 4-hour count is, no, that's the daily. I'm going to the 4-hour count here in the Dow and see that rising wedge here. This, while you might look at it and say, well, the market's going up, whoop-de-doo, it's bullish, or it's a bull market. Right, okay. But you can test that pretty well by this rising wedge here, because a healthy market would retrace, a major advance. This market is barely retracing anything at all, and the breadth of the market is consequently the breadth of the move is getting tighter and tighter. Interesting, I don't have my volume bars on. I probably should have it on, but the volume in general is decreasing. And I actually read this morning that retail traders have pretty much said goodbye to stock trading now that they've got to go back to work. So, it doesn't help when volume is declining at all-time highs and breadth declining at all-time highs, and the pattern compressing at all-time highs, and then do diagonal pattern still in play at all-time highs, and pretty bearish long-term momentum setups at all-time highs. Okay, so I think I've made my point there. The short-term pattern I did change last week to, because we had this over, let's say, a relatively way too long correction sideways, which was being counted as a fourth wave within wave C. It has warranted a change of tack on that one, because, well, while we did blast out of it as a fourth wave leading to a fifth wave, it just didn't fit with the, let's say, the dimensions or the relative dimensions of the previous waves. So it looks like we've got 5 up in A, a large ABC of some sort, probably a complex flat. So obviously it's a triple combination. So we've got 3 down in A, a very complex 3 up in B, and then 3 down in C. And also the C wave failed. It failed to make a new low below wave A. So, all these things complicating matters. We did burst higher out of that. So the fifth wave was then changed to a C wave. So it looks like we're running higher in wave C of 5 of 5. Now you can see the long-term wedge here that comes in here, and here. This is the wedge pattern. So we've broken out slightly above that wedge pattern. I think once we break that back below that wedge pattern again, that will become a kind of a technical resistance anyway. Okay, so if we have an ABC running up in wave 5, then we've got 5 waves up in wave C to look out for, and we'll see what happens this week. You can see that we've probably, actually, I should point out the 4-hour. No, sorry, I'm thinking of the S&P there. So for this week, let's see how this long-term wedge holds up in regards to this ending diagonal pattern. And when that happens, you'll see me shouting. Okay, so let's move on to gold. Was it this week or last week we changed on this one? I was counting this as a fourth wave, but the continuation higher has either classified it as a first wave up or a B wave. So I'm still, reluctant to, given the fact that I think that we're going to see a spike in the dollar, especially in terms of the Atlantic pairs, so Eurodollar and cable. And you saw there also the corresponding bullish pattern on dollar yen, suggesting that medium term at least anyway, that the dollar is strengthening and not hyperinflating, as I've heard over and over. I'm sure you've heard it too, over and over and over and over and over and over again, that it's the end of the dollar. I just want to, probably should. I know I've jumped into this a few times on my weekly updates, but the depression, the Great Depression, is a very good benchmark to use to kind of to weed out what should happen in terms of currencies, and even in terms of economies of, let's say, over-indebted economies. So back in the Great Depression, the main creditor economy of the world was the US. Now, you would say, "Oh, that's a very strong economy. They should do well in any downturn that would come." Wrong. I should have a gong there sounding, saying that you're wrong. The creditor economy is the economy that will do worse, because the creditor has assets that will fail in a deflationary depression. The asset holding, or the entity holding the financial assets, that is the credits, will suffer most in terms of an oncoming downturn, economic downturn, because their asset base will fail, and therefore, the people holding those assets will fail, or the entities holding those assets will fail. So, back in the Great Depression, the creditor economy was the U.S. In terms of, let's say, the US and let's say the UK, I think it was the second biggest economy in the world at the time. The debtor economy was the UK. The UK, relative to the US, was in a large amount of debt. Now, it doesn't mean that they didn't suffer during the Great Depression, because they did, but many of the debts were wiped out. Therefore, their actual balance sheet, their trading balance sheet, actually got healthier. If you can imagine that, the debt load on their economy decreased, whilst the asset base of the US economy decreased, if you can understand. So, in terms of who fared out better in the longer term, the UK actually fared out better in the longer term. They had a shorter downturn economically, because the deflation of the debt and the collapse of the debt actually helped alleviate pressure or debt payment pressure on their economy. So what will happen in the flip side? No, I'm not saying that they had a fantastic time during the Great Depression, because they didn't. They had a terrible time too. But in terms of balance sheets, they actually fared better. The main debtor economy in the world right now, a single entity, would be the US. The US dollar base would be the main, let's say, debtor economy. So the main amount of debt in the US, or it's the main amount of debt in the world financial system, is denominated in US dollars. This actually functions as a major short in the US dollar. Functionally, creating more and more US dollar debt is a major short on US dollars, because you are creating, let's say you are selling the dollar and buying assets. So the major debtor is US dollar. US economy is the major debtor. In a downturn, many of those, most or a lot of those US dollar debts will fail. Henceforth, the debt burden on the US dollar will decrease. It'll also increase the demand for dollars. In a downturn, it'll increase the demand for dollars to pay off dollar-denominated debt, which increases demand for dollars, which drives up the dollar, which drives more bankruptcy. It's a horrible negative spiral for those who need to pay off dollar-denominated debt. Now, it'll still wreak havoc on the US financial system, but it'll actually probably be a net positive for the dollar, because the dollar will become more valuable. Now, I'm saying all this in terms of all of the rhetoric that has been pumped out, suggesting that the dollar is on the verge of complete collapse. I'm sorry, I just don't see that. That's not. You would have to create something in the order of $100 trillion worth of dollar-denominated debt, unbacked credit, to cause a hyperinflationary depression. Now, maybe that'll come after the deflationary depression. Maybe then they'll let loose the spigot and completely trash the dollar. But I'm not sure that's going to happen, to be honest. Okay. You can record this and play it back to me when I'm completely wrong, but I just don't see that happening. Okay, right now, let's get into gold. I still think that we're on, let's get the daily count there. This is the daily count in gold. We're in a fourth wave. Now, there is an argument to be made that this fourth wave is already over. Now, I can't confirm that, because we haven't got a bullish impulse wave completed off the fourth wave base. Now, if this is a first wave up, all right, let's say wave C is complete there, okay, and wave 4 is complete there, okay, all right. I'm a long-term bull on gold as well, so I'm not arguing with you there at all. If that's the case, then we've got 5 waves up completing, and then we should get a 3-wave decline. So we should get a 5-3 pattern forming a bullish impulse wave, probably right up along this trend channel again. And I'll switch to a complete bull on that at that point. We get a 3-wave decline, and we get a failure to a new low. Then count me in. I'm all in on that. Then I'm long. But right now, I think the risk is too high. I think the pattern still needs completion in the longer term, and I don't think we're there yet, or in the medium term, let's say. I think we are probably now morphing or have morphed into a triple combination. So we've got 3 waves down, 3 waves up, and 3 waves down. So technically you could probably call this a WXY correction. But I think that this C wave will overtake, and we'll get an ABC pattern down in wave C to complete this triple combination wave 4. Okay, prove me wrong. I will be proved wrong when we have a completed bullish impulse wave off the, let's say, failed C wave low. And I'll show you that in the 4-hour count here. So this would be a failed C wave. So that's where this wave C and wave 4 would have to complete. And then we would have an ABC down complete, and we would have a bullish impulse wave developed off that. So we'd have a wave 1 and 2 starting up into wave 5. Okay, I'm not there yet. Not to say that it won't happen, but I am, let's say, I'm not, long term, I'm bullish on gold, but right now I think it's too simple. I just don't trust those lying eyes, I suppose you could say. So I think that we've got probably an A, B, C pattern going on here. So we've got 3 waves up in A, 3 down in B here. This is the short term, the hourly chart. And then we've got a 1, 2, 3, 4, 5 closing out in wave C of B. And then we should head lower again. Interesting enough, we're approaching that 62% retracement level. We've filled a trend channel. We've got 5 waves up, so that's as part of a C wave. Let's say this 5th wave here actually breaking out into 5 waves. So we could have wave 1, 2, 3, wave 4 and 5 left, and then we should turn lower into wave C. You can see the bullish alternate count there is still in place. If we've got 5 waves up in wave 1 as per the alternate count, then we should get 3 waves down in wave 2, and I think we'll probably fall back towards that 1720 level again in 3 waves down. Okay, so that's the outlook for this week, is for this B wave to top off. Okay, crude oil. We have retraced a good percentage of the previous decline, but I still think we've got 5 waves down. This curmudgeon of action here is still viewed as a second wave. You can get into the hourly count here. We've got wave 1 and A, B, C up in wave 2, and I think we've got a wedge in wave C of 2. And then we've got a wedge off that actually in wave 1 and 2 down. So, well, I suppose yet to be decided if this impulse wave lower has started yet, but let's see how that develops this week. Okay, so I'll move on to the S&P. I'm just going to run through these last few markets here. There's a 4-hour count in the S&P, wave 1 and 2, wave 3 and 4, and now wave 5 completing here. Wave C of 5, so we're still running with the ending diagonal pattern here. We did have a sideways pattern just like the Dow, but in the S&P it actually seems to have completed as a triangle. So we've got a wave A, B, C, D, E in wave 4, and then a pop higher in wave 5. We are approaching an interesting relationship between wave A and wave C. So wave C is actually reaching 162% of wave A. So that gives us a target of 4280. And we're close enough, for a country job this week. Or sorry, right now. So let's see how that pairs out this week. If we fall, this will fall. This market is going to fall. It's going to fall hard sooner rather than later. And if we start taking out shoulders, previous left shoulders of support, most especially this previous fourth wave. So that's 37.22. I know that's a long way down at this moment in time, but I'm not forgetting about that at all, because I think this market could fall hard, very hard, in the short term. Last March is a perfect scenario for this market also. So let's see how that works out. Okay, we've got silver here. It's pretty much the same count as gold. I don't really have to run too heavy into this at all, because we've got 3 waves down in A, 3 waves up in B. We've hit the 62% retracement of wave A right now. If you project it off this level, then wave C down should bring us back below 2160, which has been the target for a good while. We are about as overbought as you could get, like in the short term, without seeing a turnaround. The hourly chart here. Where's my hourly chart? Bring you back into line. Shows a possible 3, 3, 5 completing in wave B. So let's see how that works out this week. I am actually going to end it there, because I spoke too much in the middle there. So this video is probably going on and on. Nobody watches to the end anyway. So thank you all for hanging around on the website. God bless you. We will see you again, obviously, tonight for tonight's update after market. And then for everybody else, hopefully I'll get around to a video towards the middle or the end of this week. I'll probably do a midweek subscriber-only update as well, video-wise. Okay, I think I owed you that. Shalom. God bless. And we'll see you during the week. Bye-bye.